Hi, and welcome everyone to CoreNet New Jersey's podcast series. I am your host, Greg Angelillo of JAG Advisory Services and member of the Education Committee for CoreNet New Jersey. I'm also pleased to be joined by Banafsha Sultani and Mohammed Shahzad from the Education Committee. Hello,
Hello,
my
hello.
friend. This is another episode of our ongoing series, and we're pleased today to be joined by Rick Lechtman of Marcus Millichap Capital Corporation and IPA Markets as our esteemed guest today. Welcome, Rick.
Thanks so much for having me. Appreciate the opportunity to speak today, Greg.
Appreciate you being here. I know a lot of our members and non-members alike are going to gain some value from this. Just by way of background, Rick is a vice president of Marcus Millichap Capital Corporation, MMCC, and IPA Capital Markets out of their New York office. He joined MMCC in December 2015 and has more than 20 years of commercial real estate finance and sales experience. Of course, Rick, again, we appreciate you being with us. This series has been designed to educate our member and non-member CoreNet audience on relevant real estate industry topics and current workplace strategies. We'd like you to check out our website for more on our chapter supporters who help make event series like this possible. You can go to www.newjersey.corenetglobal.org/home for more there. So now that we have sort of the pleasantries out of the way, Rick, I want to ask you just right from the top about your background, how you got started. If you can share with our audience, what was really the first creative spark, if you will, that led you into this industry?
Greg, thanks for the question. The first creative spark, I will tell you, when I got out of school in '89, I thought I was going to Wall Street because that's where I spent my summers. But the stock market had crapped out in the fall of '87, and my trajectory to Wall Street was a little convoluted. So I started my career in sports television. And interestingly enough, just the other night, I went out with my former boss who ran the sports group. It was called Sports News Network. It was basically ESPN Sports Center 24 hours a day before there was Sports Center and 24 hours a day. But what I found about those people in production television, all those people were really passionate and really smart, and they knew exactly what they wanted. So I shouldn't have been on the production side. I really should have been selling ad space, and they'd probably still be on the air today if I was doing that instead. So I actually came back, that was in DC, and I came back to New York, answered an ad in the New York Times for a job as a residential mortgage broker in the early 90s. And before there was all these national, wholesale residential mortgage brokerage platforms. I was at the infancy of the mortgage brokerage business. And next thing you know, I did that for a few years, did some deals for a bunch of bankers on Wall Street. And those bankers ultimately started something called CMBS. And people liked what I was doing from a sales perspective in real estate. And they said, we're starting a small loan CMBS group, which is a commercial mortgage-backed securities. So I became a loan originator in, January of '96. And I knew my name was on a rent roll, but I didn't know how to underwrite commercial real estate. And before you know it, they taught me everything, closed my first loan within 3 months and took some classes. And that's how I kind of launched my career in real estate.
Yeah, that's such an interesting background. And I don't know if I've shared this with you. I know a lot of folks know, and Banafsha and Mohammed too, but I was a TV sports reporter myself. And it's funny, wind up in commercial real estate on the energy side for me. But, at the same time, there's such a transferable skill set. And I think it boils down to people and your way with those folks and how you ultimately jive with a lot of different personalities. So no, it's such an interesting background. It's something that I can certainly appreciate, in you. So thanks for sharing that. From I guess a capital standpoint and a finance background, I guess the question that I have is, it really was kind of like learning on the job, right? Because similarly to you, I didn't take a class in this field, right? And it wasn't what I grew up to do in essence, but here we are. So if you can kind of share those experiences of how the industry has evolved in your time and sort of, learning on the fly to get to this point.
Look, when I went to Tulane University, while my parents probably sent me there to get an education, I really got an education in socializing, music, food, and everything else unrelated to classroom. But I did have a great network of friends, and one thing led to another, which kind of got me to my job on Wall Street, where I wanted to get back. I wanted to get to Wall Street. That's kind of where my father, grandfather, uncle, everybody had made money, and kind of the world environment I grew up in. So I knew I wanted to make money. So basically, I found my way to Nomura and JP Morgan, and I knew getting a good job was, and being in a place with individuals who are thought leaders, and when you can find a good mentor and a good company that allows people, we hired people based upon who we liked and who we thought would work hard, and they would be trained. So at the time, the infancy of CMBS, call me employee at Nomura of number 60 something out of a firm and group that grew to 450 people. I just basically befriended everybody who joined after me and helped them get settled, because I knew that we could make more money together than if we were to, kind of compete with each other for new business, because there was more business to be had at that point in time. And so one of the first things I did, I had a buddy, Joe Tuffarello, who went to Villanova, and then he went to NYU to get his MBA. And basically Joe on the back of the napkin taught me how to underwrite commercial real estate. And from there, I went to NYU to take a class on underwriting commercial real estate, and then I ultimately went back to NYU Shack to get my advanced professional certificate as well. And I never stopped learning, but I'll go back even earlier from an educational perspective. When I got out of school, knowing that sports television wasn't for me, I did get into the finance industry. And getting into the finance industry and sales as a residential mortgage broker, the first thing I did was take a class with Dale Carnegie on how to sell, because the company that I was working for, really wasn't going to train me to be a salesperson. And there are certain skills that I have and certain things that I was weak at. And all these things I've done and, searching in my life is, you take a path and you try to be the best you can be, but also know that there are things that you're weak in, and, try to strengthen those weaknesses and be as, smart about how you spend your time outside of the office. It's not just what you do inside the office in the 9 to 5, but how do you, you're always learning something new, no matter, what age you're at. So that's a little bit about, how I got educated. And, when I was at Nomura, I worked 6+ days a week, knowing it was the best opportunity I was ever going to get to make something of myself, and I wasn't going to fail. So I did everything I could to ensure that I put the time and effort and energy in to be successful.
Yeah, and I think that, you mentioned about the education aspect and background, and again, it's much appreciated that you've shared it. I don't know that anybody, no matter, the education or the mechanisms that were in place, could prepare for what happened with COVID, right? And the pandemic and the shutdown and things of that nature. So, how has the financial side of things evolved for you over the course of last year? In particularly, if you can highlight some success stories, because, everybody wants to talk about interest rates and where the market is. But I know that underwriters have gotten tighter with their lending standards, and so much has changed and evolved from this pandemic. So, I know it's sort of a two-part question, but if you could really describe what the last year has looked like and some of the lessons that you've learned as well.
Well, one of the first things, having lived through several cycles, and let's start with, when the tax laws changed in '86 and the stock market crapped out in '87, and then you had long-term credit in '97 and a Russian bond issue, and then you had 2000 internet bubble burst, and then you had unfortunate events of 9/11, another recessionary period, and like real tragedy, and then you throw the housing crisis into it and what that did during the Great Recession, and now this period of COVID, we live, nobody, when you throw all that out into the equation, you'd say, like, who would believe that we'd be through all of these unusual, unique cycles that affected some tremendously and some not as deeply. But obviously, in a global pandemic, everybody was, affected in just profound ways that, to this day, you really can't pass judgment on how anybody is acting or what they've done in the last 12, 14 months, because everybody's situation is so unique. But one of the first things that I did this time, different than the Great Recession. The Great Recession, not just Wall Street was burning, but there was no liquidity in the marketplace. There was, Freddie and Fannie quickly stepped in to come up with solutions on how they were going to be able to lend to the multifamily sector. So we focused some more energy on how do we work with multifamily owners who have properties that they need to refinance more so than acquisitions. And we started then consulting with a lot of clients. What do they do? Because all of a sudden, all these people lost their jobs, couldn't pay their rent. And we saw, how fragile the economy is and the population as a whole who's living hand to mouth, paycheck to paycheck. And that affected multifamily. It affected retail with, particularly, what the shutdown looked like in the Northeast in particular, when, the stores and restaurants were closed. So we really spent the first few months just consulting with our clientele. And we did a lot of Zooming of just giving people updates on what was going on, as well as helping them with the lenders that we've worked with in the past with these clients to ensure that they could get, deferments of, their principal payments or things like that, so that, everybody could kind of get through that initial period. And then by Memorial Day, we really started to see the market liquidity come back from a multifamily and a single tenant net lease, retail, office, if you had, long-term leases with good credit, industrial has been hot, but there, the market, there's been a bifurcation. The better assets the cap rates are lower today, and then there are assets that are really, impacted. Most lenders are not looking to foreclose on anybody right now because, they don't want the property back because you got to pump more money into it and not knowing what the exit strategy looks like until, some portions of the economy still continue to, I call it, reinflating, which, the good thing is retail's come back nicely. I've seen, stronger than I thought it would. And multifamily, most, unless you're in New York City, or some places in New Jersey, most of those tenants are paying rent again. Landlords at some point are going to be able to evict people. And that's not going to be good for the people that were not, that were bad actors during this period of time. Obviously, some people were really impacted, but, I'd say cap rates for good properties are lower now, and there's a lot of financing available. So it's really just helping the clients and advising, and the market's pretty strong. Rates are low.
Yeah, and you mentioned, so I know you're responsible for securing commercial debt and equity financing for a lot of property types, not just some of the ones that you mentioned, but a couple of times you hit on industrial, you hit on multifamily. As we sit here now in 2021, what is the expectation? Do you think it will continue to be those industries that are gravitated to, or they're not those industries, those segments of the industry? Do you kind of envision that it's going to be the same thing for the balance of 2021 into 22, or where do you see things as they sit today in comparison to where they could be?
Yeah, I mean, everybody's looking to put money out. The stock market, the equity markets are at all-time highs. And, real estate 20 years ago was an alternative asset class. It's not an alternative asset class today. It's part of many people's portfolios and a great way for people to attain long-term wealth. And it starts with one asset. It starts with a small asset and, cobble together some more money to buy something else, sell the lease less efficient. So multifamily, which is what so many people look to start with, and or single tenant net lease retail with good credit. There's a lot of ways to invest in the real estate market, and I'd say that's where most people start their careers, as opposed to investing in an industrial or multi-tenanted retail. And hospitality is a little bit off. I wouldn't call that one of the four main food groups, but it's an operating business to an extent. That most people have to be in that full time to really appreciate how do you make it money in the hospitality sector.
Right. Yeah. No, and that's good. I mean, that's a good indication of where a lot of the money is headed. Because of that, what metrics do you track? Right. Give me some leading indicators, if you may, thresholds that you find telling, maybe even pre-COVID world and now in the midst of the pandemic. I don't like listening to the headlines, because I think the headlines, they're selling newspapers or, ad space on TV and whatnot. To give you just a couple of different indicators of where people focus, 80% of everything that commercial real estate that trades in America trades under $10 million. We call it the private client segment. That's where the majority of people are investing in real estate, under $10 million. And you have the mid-market that's 10 to 25 million. And this depends on whether or not you're in Atlanta, Chicago, Milwaukee versus New York City, San Francisco, the gateways. And then institutional, which is really, 25, or in New York, it's probably 100 million up is institutional, which the mid-market is another 10%, and then the institutional is 10%. So, most time, when you're hearing reports out there, people are talking about the institutional world, but that's rarefied air. That's the Blackstones, the Brookfields of the world. The institutional investors are playing, and certainly it's where a lot of the the tenants, from a CoreNet perspective, that's where the tenant, everybody's got the nice fit out in the Fortune 500 company type of space, and everybody wants to nice sexy interior fit out for office buildings and such. But in reality, so much of the real estate investment industry is really happening under the radar screen that doesn't really get discussed on a day-to-day. So I don't listen to headlines about what's going on, because every day there are people buying and selling and doing something. And when the market dislocation occurs, like it just did a year ago, nobody's buying and nobody's selling, because you can't, institutional money has a very long-term outlook, and nobody wants to do anything until the dust settles, and then somebody makes a trade or does something because they have money to make a move, and that first mover generally it makes a good bet for the long term, but nobody wants to make the bad bet too early. So it's kind of like a chicken before somebody moves, and then everybody else kind of follows like a lemming from an institutional perspective. But CBD office, right? Your Boston, New York, Philadelphia, Washington, those cities, and I'm sure Chicago, LA, and San Francisco, Seattle are tough places right now, because these are markets where people need to take mass transit to, in many cases, to get to work, and not a lot of people are taking mass transit. I was sitting in my Manhattan office today, and we've got 40,000 square feet, and if there are 25, 30 people in the office, that's a good day. The trains, commuting to the city, it's still not very crowded, and, although you have a lot of people driving in, and traffic's gotten, quite, it feels like, it's back to normal in the suburbs, and getting into the city is not an easy endeavor these days. All the parking garages in Midtown are full, but you don't really have any people on the street, because nobody's taking the subways to get to work, and most people are still home. So how do you underwrite office when you don't know who and when people are coming back to the office? And that's the, $100 million question at the moment that, nobody's got a perfect answer to. Right. Yeah. And so I guess in light of that, it's how do you choose projects right now, financing projects? You know, there are points when I'm sure you have to say no. So when does that happen? Right? Is it because of a confluence of different things in underwriting that you know that folks can never get past, or you know, really, if you can kind of enlighten our audience on what goes into choosing those projects and some of those parameters that maybe you didn't have to deal with even as late as a year back.
Well, it all, as a, you know, as a broker, as a, you know, finance intermediary, capital advisor, all I have is 8, 10, 12 hours a day to make a living. So you have to pick your clients and the deals that they want you to work on very well to ensure that you can execute based upon their, you know, vision and business plan. And if the business plan and their vision doesn't match up with, you know, with what the market is willing to lend on, or based upon, you know, what the client's needs are and what the debt and equity markets look like, you know, you have an honest conversation with the client, say it's not the right deal, or, you know, it's, you know, threading the needle. And, you know, I'm not in the business of, you know, threading the needle. My job is to, you know, tell my clients what the market looks like, and then hit that mark, make the market, provide clarity to who is saying what and why, and then making a determination about what's the best option to go with. Is it lender or equity A, B, or C? It's not always the most proceeds, lowest coupon, or, you know, best equity terms. It's, you know, who's going to execute so that the deal can be facilitated properly and everybody can, you know, do that and then effectuate a business plan and move on to the next deal. So it's you basically choose deals wisely, and that's not easy. You know, young and, you know, when you're first in the business, it's very tough to say no to somebody if you have no business. But, you know, quickly it's, you know, as people get wiser and more it doesn't matter if you're a leasing broker, investment sale, or finance professional, you still have to, you know, pick deals that that you have the vision that you can get from A to Z, so that gets closed at the end of the day. So that's how I pick them. You know, I don't take flyers on stuff because they never really happen.
Sure. No, that's good insight. All right. So I have a couple more for you before we get to our final five. Banasha,
Sure.
do you have something that you wanted to add?
I do. So earlier in the conversation, you mentioned mentoring and teaching the younger generations. So in this pandemic, in this world that we're mostly virtual, how have you been going about that? Can you explain a little bit more?
You know, so I just, you know, through the year, well, let's start with when I got out of school, you know, there was no LinkedIn, there was no internet, and nobody was really looking to mentor, you know, young people coming out of school. I just found it very challenging. So as I figured out my way, I decided I'd give back because I really feel that I've got a lot to offer, and, you know, I've had my success, and I'm willing to spend time to make sure that those that are seeking mentorship and or deserving of it, because I can size up a young professional quickly to say this person has or doesn't have it, and I make them look in the mirror. Quite frankly, you know, there's some people that want X, Y, and Z, yet they haven't earned the right, and I show them, you know, you need to do something to attain what you want. It's just not showing. It's just not because you showed up or you have a name. There's so many deserving young professionals to get on their path. And the nice thing is, whether you went to, you know, X, Y, and Z university, or you stood out in the classroom, and or you had classmates that really believed in you and you were a leader, you know, those individuals are really easy to mentor and to introduce them to other people. And you can see from a resume who's really put the time and effort in and deserves the opportunity. And so, you know, people reach out to me all the time, a lot through, you know, my network, a lot of family, friends whose kids want to get into real estate reach out to me. And, a lot of my real estate friends have their kids speak to me, and Tulane kids where I went to school. Yeah, everybody reaches out. The good thing is today, even though everybody's virtual, and it's very tough to figure out how to get a job, and in real estate in particular, with the exception of a few real estate companies don't hire like the accounting firms or the investment banks, the consulting companies who hire that new class that's going to start over the summer after they graduate. Real estate hires on an as need, as projects, as things grow, or as somebody leaves the company basis. So I always start with, there's never a bad time to look for a job when you're going into, say, your senior year of college, or, and I would say today, I'm really surprised by how many people have been able to get their first jobs as they're starting to graduate from, this most recent, 2021 graduating class, that, employers are looking for people, which was very different than the Great Recession, which it took several years for those graduates to find their footing. So that's a positive green shoot relative to last summer, which was a little bit more challenging, but people still did find places because some people left the industry, or some people were doing workouts, or there are always ways in. You just have to keep on pushing. It's a numbers game.
Absolutely.
I hope that was helpful.
No, absolutely. That was great. Thank you.
So final question before we get to our final 5 questions, where we add a little bit more color and off color fanfare to things. Where do you see things for the balance of the year, and maybe beyond that, Rick? If you can if you had that proverbial crystal ball from a financing perspective, if where you sit now, you had to make any predictions, what would those be?
I think we're not through the pandemic, but with half the population at least receiving one dose of vaccine, and more, will happen over the next 3 months. And it seems like everybody who's over 16 has the ability to get an appointment these days, is what I'm seeing. I think we're in a good place to move the ball forward. There's just uncertainty about who's going back to work and when. And I'm really hoping that, I know the kids are going to come back to the cities after they graduate and over the summer. I already see, vacancy decrease from a multifamily perspective. It's just a question of when everybody's going to come back to the office. While everybody talks from this flexible work environment thing, I think the minute that people feel safer about being, out and about in a public way, the offices will reinflate and people will start going back to work. Maybe, and I think the young people want to be in the office because you got to be onboarded, you got to be mentored, you got to be trained, and you can't really, doing that on Zoom all day is a very, very exhausting process, not just for the younger professionals, but for their, seniors as well. This flexible work from home thing, I think, works in a COVID world, but I think everybody's going to, want to go back out to entertain with clients, go to concerts, go to ball games, have drinks. I don't see why the work from home thing, when the rest of the world is moving around, is not going to be quite as fun, working from home in your PJs.
Yeah, well said. And all of us know, especially through CoreNet, that most of the best networking happens face to face. So, excited for that day. Appreciate all the insight, Rick. Thank you very much. All right. So as I alluded to earlier in the conversation, in honor of the great James Lipton, we'll put a similar spin on this last segment of the podcast and ask you our final 5 questions, just quick hitters meant to keep you on your toes in a segment that we like to call Pod Culture. Are you ready?
Absolutely, Greg. Go for it.
All right, cool. So if you could choose one song to play every time that you walked into a room for the rest of your life, what song would that be and why?
Bob O'Reilly, no doubt. The Who. It's just
nice.
They're my favorite. They're my favorite group. That's it.
Very cool. What profession other than your own would you like to attempt?
Oh, geez, what profession? That's a toughie because I don't know that there's anything else I wanted to be. But I don't know. Maybe retired. How about that?
That sounds like a good end goal for sure. All right, I'll make this one a little bit easier. What about which profession would you not like to do?
I definitely never want to be an office leasing broker. That to me would definitely go down as one of my least desirable things. I did entertain that before going into finance.
Okay, there you go. So tell me this: if you're shipwrecked on a deserted island, where you already have your food and your water needs taken care of, right? Give me 2 items that you have to take with you.
My iPhone and internet reception.
Fair enough. All right, Rick. And finally, last question. Give me your favorite food. You told me earlier when we were off the podcast that you dropped a bunch of weight during COVID and you reinvigorated yourself and your wardrobe. But if you could, give me that favorite food that you can't be without.
Okay, so my favorite food that I can't be without is my favorite restaurant is Vincent's Clam Bar, corner of Mott and Hester, Little Italy, and my favorite dish is linguine with fried calamari, extra tentacles with their medium sauce. That's my go-to.
Maybe we'll add a little red wine to that, some cab, and we're ready to rock. I love it.
I feel like we need to make the next meeting over there at this point.
Well done. Well done. I love that. Rick, thank you so much for giving us your time today and your insight, your feedback. You are officially off the hot seat. We thank you so much.
Thank you. Thank you very much. And thanks, CoreNet. And if anybody ever needs some advice and guidance, don't hesitate to reach out. Appreciate it.
Awesome. We appreciate that. You can learn more about Rick and Marcus and Millichap by visiting their website at www.marcusmillichap.com. Once again, I'm Greg Angelillo on behalf of Banafsha Sultani and Mohammed Shahzad. We appreciate you joining us for this latest podcast of Digital Dish from CoreNet, New Jersey. We'll see you next time.